Welcome to Wisdom to Wealth, episode number 8. Whether you are new to financial planning or you've been planning for many years or you just want to get some more tips, our mission here is to help you gain control of your money so that your money is not controlling you. I'm Whitney Hammond, owner of Sovereign Wealth Management. And joining me today is Theresa Pellizzari, Financial Security Advisor with Sovereign Wealth Management. Hello, Theresa. How are you today?
I'm good. How are you?
I'm great. Thank you so much. I'm excited to hear what we're going to talk about today. What's this?
Okay. Well, there's one question that I have about business owners that I work with that have excess money in their company. Can you tell us, share some ideas on how they can use that money, possibly keep their taxes as low as possible and reduce their risk because they've already taken a risk to make the money. So maybe you can talk to us about that.
I sure can, because I'm one of those business owners. So business owners, what they tend to do is the goal is inside a corporation is to try to retain earnings. So it's another kind of bank account. It's another shelter in a way, you've got RSPs and you've got tax-free savings accounts and you have money inside your corporation called retained earnings. So every year the business owner usually tries to get more in their retained earnings and just keep building that retained earnings. And so with those retained earnings, they get used, they get invested back into the business expands, but there's always retained earnings there. Then sometimes what they do is they'll start buying investments or they'll leave it in cash. So I know, Theresa, you were talking to me about one of your business owners who's been investing in investment funds, and he's talking to you about, well, why do I have to pay so much tax on them? And I have this too. So for example, if you have $100,000 saved up in your corporation and it grows by 10% that year and you have a $10,000 tax remittance, you have to claim this on your corporate tax return, you're going to have to pay 54% of that back. So you're going to have to pay a $5,000 tax bill. So a lot of times with business owners, they'll just keep it sitting in cash. And there are ways that it can be invested. And so what we do is there's two reasons to do this. One, we put retained earnings inside of an insurance policy. There's two reasons for this. One is the policy can grow and grow and grow and grow, and there's no tax slip to pay every year.
I like that.
Yeah, it's fabulous. The policy is vested. So every single year, money goes in, there's a dividend paid, then that money is invested. And it's vested. And what vested means is it can never be taken away from you, so that it can't go down. It can only go up. And that's written in the contract. It's contractually designed. So when you're 100 years old, the death benefit and the cash value are going to be equal. So you know you've purchased an asset that's going to do one thing, and that is to grow. So you've got that cash value that's growing in there. You can use that money later in your retirement. You can cash it out. You can leverage it. You can do whatever you want. That's your money. If you don't get that money spent in your lifetime, this is the real icing on the cake, is that money will come out of your corporation and it'll bypass through the capital dividend account, and you don't have to pay income tax. So the taxes are very, very, very minimal. In fact, the older you get, there's no tax. So it's a fabulous way of being able to transfer money from one generation to another. So we call that G1, from G1 to G2, and not have to pay tax. So if that money is saved up inside the corporation, and the business owner, let's just say they live until they're 85 years old and they saved up, I don't know, $2-3 million. They might have $50 million in there, whatever amount they have saved up in that corporation. The day of reckoning comes when you pass away, and the taxes will need to be paid on that account. So if it's inside of an insurance policy, there isn't a day of reckoning and the taxes will not need to be paid. So we build wealth, and one of the ways we build wealth is we understand how the Income Tax Act works, so we can work with you to build your wealth and build it much larger than you can build it on your own. How do you like
Now,
that idea?
that's an awesome idea. I love it. Who wants to pay more tax? And it's all legal, so it's just understanding where the opportunities are. And so, Whitney, talk to us about that money is in the business. It's the retained earnings. Will the business owner take that money and then pay the premium? Do I get taxed when I pay that premium every year? How does
No,
that
you
work?
don't. No, you don't. So what we do is we just do it. It's like a new asset allocation. So so whatever the amount is that's saved in the corporation, we look at how much do we want to put over into this insurance savings plan, and so we just flow money over on an annual basis. So I do all of the math. I look at everything. I do the estate plan, and I can do the forecast and say this is what it looks like. And this is what it looks like if we do it this way. So they're actually not paying a premium. They're just they're reallocating funds from here to over here. If they want that money, they can get the money. They just call and say, hey, you know what? Like, I need this money. So, and there's different ways of getting money. One is we just cash it right out and give you the money. There's other ways where you can clip coupons, which is clipping your dividends every year. Banks love insurance because they love to loan money. It's the best thing to use for collateral. And the other thing is, if you do use your contract for collateral at the bank, what we do is we assign the policy to the bank, and the net cost of pure insurance is now a deduction to your corporation.
Sounds like a great plan.
It is. You know, anybody who's a business owner who did not understand this video, write below, write to us either privately or below publicly, and we will have a chat with you. We'd be happy to discuss this more, or any questions, we will go deeper in our Wisdom to Wealth videos. Thank you for joining us, and we'll see you again soon.
Great. Bye, everyone.
Bye, Theresa.
Bye, Whitney.
Bye.